shortly. So I was told by my technical director last week that after January 25th, I couldn't say Happy New Year anymore, and I usually listen to everything Billy tells me, but I'm going to violate that rule because this is the first time we've gathered as a board in total this year. So Happy New Year to everyone. Happy New Year to all of our observers following us on YouTube. And welcome to our guests for an important board meeting. Today is the day we have a discussion with the IASB about their work. And remember, our focus with them has always been about auditability of their standards. And this has a particular importance as we go into our next strategy cycle, where we highlight the relevance of creating a strong ecosystem with other standard setters. So it's a really opportune moment for us to speak to the IASB about their standard setting proposals with our auditability lens. And cooperation with the IASB is a long hallmark of our work, but we expect to even further intensify this going forward. So all participants for this meeting have received the slides for the video conference, and the IASB will use those for their presentation. We've made a notice this meeting to the public, and the slides for the agenda items will be available on our website after this meeting. Two apologies today. Chud Wee and Greg Shull are absent because of prior commitments. We do welcome Neil officially for the first time to our board. You attended our December board meeting, but it's great to have you officially on board here. And as you know, Greg Shull is a new board member as well, and will certainly be joining us in March. I see Josephine in my upper right-hand corner. It's worth noting, congratulations to you for being appointed by the PIOB as our vice chair. So welcome, or commiserations, Josephine. I'm not sure which it is. I'm also thrilled to welcome a few new staff members to our call, and if they're on, I see Ida Fung is on the call. Welcome, Ida. She's a senior manager. You're joining us from, I think, still in Hong Kong, where you've previously been at Deloitte, where you've been working in the National Audit Technical Department since 2017. Oh, you are in New York now, are you? Yeah, welcome to New York, as Taylor Swift would say. As my daughter reminds me many times, huge Taylor Swift fan. Fadi Mansour has joined the team as a senior manager as well, also from Deloitte, Deloitte & Touche Middle East, where he's had responsibilities for audit methodology and quality management across the region. You're joining us remotely from Lebanon, and will relocate to New York as soon as our visa process permits. So great. And if TK is on the call, welcome to you. Many of you know TK as Josephine's TA, but he's also joined as a part-time seconded member of our team. I wanted to also welcome our official observers, Michael Hafman for the PIOB, and our other official observers, Jim Dowkin, our CAG chair, and Yosh Matsumoto, representing the JFSA. And finally, last but certainly not least, our two guests from the IASB, Rika Suzuki, joining us from London, and Jennifer Mickey Gerard, whom I've worked with quite a bit over the years. So it's great to see you with us today. So you'll remember Rika from last year's update when she was introduced to the board, and she joined Mary and Henry Reese for the presentation. As you know, Mary retired from the board, and Rika's taken over IAASB liaison responsibilities for the board. So with that, I think I've spoken enough. Everyone wants to hear what you have to say, Rika, Jennifer. So I'll turn it over to you.
So good morning, good afternoon, and good evening, IAASB members. Thank you, Tom, for introducing us to the IAASB members, and to Willie and Sally Ann for organizing today's opportunity. I also thank you to IAASB members for your attendance today and continued engagement with IASB on various projects, including primary financial statement, business combination, disclosure, goodwill and impairment, also agenda consultation. We appreciate feedback on our consultation documents from your auditor's perspective, especially on auditability and verifiability, as Tom mentioned. I'm a member of the IASB, as introduced by Tom, and joined by Jennifer, who is supporting me as liaison role to the IAASB. So today, Jennifer and I would like to share the update on the IASB's major projects and activities, because we are currently working on more than 20 active projects in our work plan. So we plan to allocate our time to the project and activities in which most IAASB members have more vital interest. To make this session more informative and interactive, we will pause at the end of each section to answer your questions. So we want to cover many things within 90 minutes. So I'll hand it over to Jennifer to explain the new requirements, which are already effective or will become effective soon.
All right, thank you, Rika, and thank you, Tom, and the board members. It's good to be here. If we could advance to slide 4, that'd be helpful. We included in the deck overview, but so I wanted to start out with just a relatively brief overview of what's required. We have some requirements coming into place for the 1st of January 2023, and then also some for the 1st of January 2024. And I think, as you're likely aware, probably the most high profile of these is IFRS 17, which is our standard on insurance contracts. And our IASB chair, Andreas Barco, recently posted a short video on our website to highlight this standard becoming effective at the 1st of the year, and also reminded constituents that we have a wealth of supporting materials on our website for those trying to implement that standard. I also wanted to mention 2 others in the list. One is the definition of accounting estimates that introduced the definition of accounting estimates, and then also includes other amendments to help entities distinguish between changes in accounting estimates and also changes in accounting policies. And then following on from that, also there's the disclosure of accounting policies that comes into effect. And for this one, the IASB, you may recall, amended key paragraphs in IAS 1, which is our standard on presentation of financial statements, to require entities to disclose their material accounting policy information rather than their significant accounting policies. So that was a change. And then to support that amendment, the IASB also amended its materiality practice statement to explain and demonstrate the application of what's referred to as the 4-step materiality process for accounting policy disclosures. So I would just refer you to those as well as background materials. So if we could maybe go to the next slide and then on to slide 6, be helpful. I'll just quickly go over some of the recently published documents and also forthcoming documents to give you an overview. So on this slide, we presented 6 items. So the two on the left are both amendments to standards, lease liability and sale and leaseback, and then also non-current liabilities with covenants. I'm not planning to go into those in detail today, but those are out now as final amendments. The 2 in the middle are both feedback statements. The first one is the 3rd agenda consultation feedback statement. And Rika will be spending more time later in the presentation talking through those results, so I won't say a lot here. The other feedback statement comes out of our post-implementation review, or PIR, of our financial instruments standard, which is IFRS 9, and it's specifically on the classification and measurement component of that standard. So that feedback statement was issued in December. And just to give you an overview, the IASB concluded as part of that effort that those particular requirements for classification and measurement are working as intended, but it did also add a project in response to some of the feedback to improve certain aspects of classification and measurement. And so I will be talking about that a little bit more later as well. And then finally, on the right, we have 2 exposure drafts out for comment. The first is the International Tax Reform Pillar 2 Model Rules. And I will talk a little bit more about that one later as well. That has comments due in early March 10th. And then also we have the review of the IFRS for SMEs, which is our standard for small and medium-sized entities that's out for comment. So if we can go to the next slide, please. For forthcoming documents that you might want to be aware of, these are coming out in the first half of this year. We have 2 requests for information, and those are both related to ongoing post-implementation reviews. One is another aspect of the financial instrument standard. It's the impairment requirements related to IFRS 9. So those are the expected credit loss model that we've all come to grow and love, to know and love. The other item is the post-implementation review on IFRS 15, and that is revenue from contracts with customers. So I will talk a little bit more later on about the PIRs as well. The third item on the list is the exposure draft that's coming out of the project that I mentioned earlier. So the narrow scope amendments to make improvements to the financial instrument standard for classification and measurement, and then also disclosures. And an outcome of that will be, as I said, the exposure draft that will be coming out soon. And then the last item on the list is the project summary for what we refer to as the targeted standards level review of disclosures. So what that entails is, and really the outcome of this project will be a project summary, and the IASB is planning to document methods for developing disclosure requirements and an approach to drafting disclosure requirements that would be guidance for the board. And this would be published on our website. And then finally, there's one item that's not on the slide that we do expect will be coming out in the first half of this year, and that is the final amendments on our project on supplier finance arrangements. And if you've been following that one, the project will add disclosure requirements relating to an entity's use of supplier finance arrangements. And that is an area that investors have been asking for more information and more disclosures from companies. So I will pause there to see if there are any questions before I pass to Rika.
Thank you. One thing I forgot to mention is on many of the proposals that we as a board do submit comment letters on the auditability, and that work is led by a liaison group which Eric Turner chairs on our board. So just a reminder to everyone on our work in terms of responding to IASB proposals. Any questions or comments for Jennifer? I see no hand, so maybe we could just continue on.
Okay, so Rika, I will turn it back to you to talk about research projects.
Thank you, Jennifer, and thank you, Tom. So now I start explaining about our research projects. So please move on to slide 9. So as you can see, we still have 3 research projects from previous agenda consultation cycle. One of them is equity method. Based on the feedback from our stakeholders, we decided to focus on solving application problems by applying the principal method of IS 28 equity method. Therefore, we decided not to consider the fundamental conceptual arguments on the equity method, such as whether equity method is conceptually the one-line consolidation or the measurement method. So in the future meeting, we will decide on the type of consultation document, whether we should publish the discussion paper or the exposure draft. And then about the extractive activities, based on the extensive research and also feedback from our stakeholders, we decided to focus on improving the disclosures regarding the entities, exploration and evaluation expenditures, and removing the temporary status of IFRS 6. And another one is business combination under common control. The objective of this project is to fill the gap in the standard to develop the accounting requirement for business combinations under common controls. So based on the feedback to the discussion paper published in November 2020, we decided to retain the use of two measurement methods, which is acquisition method and the book value method. Therefore, we are currently exploring when the receiving entity is required or permitted to select each method. So we are still, in the process of deliberation of those proposals. So I will pause for questions here. If anyone have any questions on our 3 research projects.
I have just a quick question. Are you conducting the research all yourself these days internally, or are you working with national standard setters too on your research agenda? It's more a process question, but something we're contemplating as we go forward.
Yes, of course. We ask some help from the national standard setter on specific projects if those topics are very relevant in their market. But the most of the case, we engage with our research project by ourselves, with
Thank
some
you.
support from national standard setters, of course.
Thank
And
you.
we appreciate all those support. Yes.
Josephine.
Yeah, sorry, Rika, apologies. As you know, I've got terrible internet at the moment, but you were
That's okay.
talking about the equity method and early stage of research. Did you say that you haven't come to a conclusion yet on whether that will be a consultation or exposure draft? I wasn't quite sure what you meant there.
Yes, we haven't yet decided what type of
Okay.
consultation document we will publish on the amendments to IS 28.
Okay, thank you.
Yes, probably we will have that discussion early this year, so within a few months or so.
Thank you. I think we could proceed.
Okay, let's move on to the standard setting project, and please move on to slide 11. So let me talk about the standard setting project, especially about what the standard setting projects are. So once the IASB confirms that a project has a directional basis for proposing requirements, that project becomes a standard setting project. But the status of those projects at the standard setting stage varies. For example, for those 3 projects on the left of this slide, including dynamic risk management, the next stage is to publish the exposure draft to consult our proposal. And regarding dynamic risk management, I will not introduce details about this project today, but if you are interested in the core DRM model, which we are currently exploring, please watch a series of mini webcast videos, which introduce the core DRM model and illustrate how that model works. So, and each video only takes 3 minutes to less than 10 minutes. So it's a really short video. So you just can focus on the topic you really want to understand. So please use that material. And then in contrast, 3 projects on the right on this slide, including the primary financial statement project, are very close to the publication of final standard. We expect we will not be able to publish the final standard of any of those three big projects in 2023 this year. So all the good thing will come in next year, 2024. So Jennifer introduced a little bit information about the targeted standard level reviews of the disclosure project in light blue on the right of this slide. So we decided to withdraw the proposed amendment to the existing disclosure requirement of IFRS 13 fair value measurement and IAS 19 employee benefits. Instead, we decided to publish the project summary and prepare the document to explain the board's IASB's approach to developing disclosure requirements across the IFRS accounting standards in the future. So this is because many stakeholders appreciated the overall direction of this project's approach for development of the disclosure requirements, but we could not receive strong support for the concrete solution for drafting proposed amendment in the exposure draft. So that is the current situation where we are now. And as you can see, many standard setting projects we have right now. So I will focus on three projects: primary financial statements, business combination disclosure, goodwill and impairment, and management commentary from the next slides. Please move on to the next slide, 12. First, I would like to talk about the primary financial statement project. The project's objective is to improve communication in financial statement by focusing on information in the statement of profit or loss. The exposure draft published in December 2019 received positive feedback on three main proposals shown on this slide, such as requiring additional defined subtotals in statement of profit or loss, requiring disclosures about management performance measures, MPMs, and strengthen requirements for disaggregating information. When we received the feedback from our stakeholders, they requested the IASB to provide more practical solutions in some aspect of those proposals. So based on such feedback, we deliberated specific topics to seek solution by balancing up the cost of applying new requirements and the benefit of improving information in the financial statements. After the IASB found more feasible solutions to respond to stakeholders' requests and needs, we conducted targeted outreach in October and November last year. Thank you to IASB's working group members, led by Eric, for attending the outreach meeting with us. We obtained valuable insight from the auditor's perspective. Thank you very much. And in January 2023, this year, the previous month, the staff reported to the board the overall feedback analysis of targeted outreach efforts. Then we will deliberate whether the proposed solutions and topics discussed in targeted outreach meetings could reduce the cost burdens, but still provide useful information for users of financial statements. So we haven't yet decided on requirements regarding transition and effective date and whether to re-export. So those topics will be also discussed in future meetings. Next slide, please. I will talk about general feedback from targeted outreach. So as I said, in October and November 2022, we conducted targeted outreach meetings and events with various stakeholders in many jurisdictions. This slide shows the overall feedback in those outreach meetings. Overall, investors and other stakeholders positively supported the direction of our deliberation and wanted to see the final standard as soon as possible. And also, most stakeholders agreed or positively supported our proposed feasible solutions to respond to specific needs and concerns on subtotals and categories, management performance measures, and disaggregation. So when we published the exposure draft in December 2019, IAASB, your comment letter focused on 3 areas: the distinction between integral and non-integral joint ventures and associates, NPMs, and the definition of unusual income and expenses. Among those 3 topics, we decided to withdraw 2 topics proposals, such as a distinction between integral and non-integral joint ventures and associate, and the definition of unusual income and expenses. So the withdrawal of those 2 proposals was based on the feedback, including your feedback, and then IASB's deliberation. We concluded that it was not feasible for us to provide better compromise standard setting solutions on those topics within this project. So that's a reason we withdrew. Therefore, now on, I will focus on the NPMs in the next slide. Okay, let me talk about the NPMs. So regarding management performance measures, NPMs, the IASB decided to clarify the definition of NPMs in response to concerns we heard from preparers and auditors, including the IAASB's feedback. So first, we clarified the scope of NPM. So we decided to exclude oral communications, transcripts, and social media posts from public communication outside financial statements. So we exclude those things. Second, in order to clarify the definition of NPMs, we decided to re-emphasize the objective of NPMs as communication of management view of an aspect of an entity's financial performance. Lastly, to avoid requiring the entity to include subtotals that don't represent management view of an aspect of an entity's financial performance as NPMs, we decided to provide a rebuttable presumption. Therefore, the entity can choose not to disclose a subtotal used in public communication when the entity has reasonable and supportable evidence to rebut the presumption. So I will give you an example. So when the entity is required to prepare the local GAAP financial information for local filing purpose, and its management might use a local GAAP measure as a key performance measure in its public communication with investors. In such a case, it's probably the management could rebut the presumption, and such a local GAAP measure could be exempted from the NPM disclosure requirements. These proposed solutions were previously positively supported by many stakeholders, but some stakeholders, including auditors, requested us to consider enhancing the application guidance. So we will consider it in the future meeting. Please move on to the next slide. I will talk about the other changes to NPMs and its disclosure. We decided to clarify the item disclosed in the reconciliation of NPMs and provide application guidance for such requirements. We also decided to include the alternative option to estimate the tax effect of each reconciliation item to reduce the cost of preparing the reconciliation of NPMs. So within the exposure draft, we propose tax effect should be determined on the basis of the reasonable pro rata allocation of the current and deferred tax of the entity in the tax jurisdiction concerned, or by another method that achieves a more appropriate allocation in some circumstances. Because of that, many stakeholders' feedback indicated such an allocation method was too complex and too costly. So we decided to allow the entity to calculate the tax effect of the underlying transaction at the statutory tax rate applicable to the transaction in the relevant jurisdiction, in addition to the method proposed in the exposure draft. All proposed solutions relating to disclosure of NPMs were positively supported in targeted outreach meetings, while some stakeholders still indicate cost concerns and others raised concerns about the usefulness of the information about the alternative tax effect calculation method. So the IASB will consider whether use of the broader range of tax calculation approach would maintain the balance between cost and benefit in the future meeting. Let me move on to the business combination disclosure goodwill and impairment project. I'm sorry about this long name title of this project. In 2022, we made significant progress in this project. Thank you for your continuing cooperation and support on this project. I want to highlight 3 decisions made in 2022 on this slide. First, we found practical solutions to improve a package of disclosure requirements about business combinations in September's IASB meeting. I will discuss more details about this matter on the next slide. Second, we decided to retain the impairment test-only approach and not to continue exploring amortization model because there was no compelling evidence to warrant the case for the change. In the November 2022 meeting, some board members mentioned that if the project had started from a clean sheet of paper, the IASB's decision could have been different. So I just want to highlight here that we could not find compelling evidence to warrant the case to sufficiently support a significant cost reduction or provide more useful information by reintroducing the amortization approach. So please note, our decision in November was not about concluding that one approach was better than another. It's about whether we have sufficient evidence for change. Third, so based on the above 2 decisions that helped the IASB put this project forward to the standard setting stage, and now we aim to publish the exposure draft. We revised the title of this project at the same time. So, but this title is consistent with the title of our discussion paper. So I think this is not something new to you. Currently, our main focus is to provide more concrete requirements and application guidance on a package of disclosure requirements and to seek possible improvement in the impairment test in IS 36. We published the IASB board members article on this project last week with my name, including more detailed background and insights into the IASB's deliberation in 2022. So please read the article if you are interested in our project's current status and progress we made. Please move on to the next slide. It's about disclosure requirements on business combinations. A package of disclosure requirements in the discussion paper was positively supported by many stakeholders, especially the user of financial statement. On the other hand, some stakeholders, such as preparers and auditors, shared serious concerns about the content of information because they consider some information might be forward-looking or commercially sensitive. They also said that integrating an acquired business with the entity's existing business might make disclosing information more difficult. And lastly, some stakeholders said providing the proposed information could be too costly. So the package of the disclosure requirement in the DP include the amount of synergies expected from a business combination, management objective for a business combination, and metrics and targets management plan to use in internal report to monitor. And in subsequent reporting period, a company would be required to disclose their progress in achieving the objective using those metrics. So the IASB decided to provide two solutions to respond to our stakeholders' concerns, as I mentioned. First, we decided to exempt the entity from disclosing some items of information when disclosing such information seriously prejudices the achievement of the objective of business combination. The exemption was developed based on the IS 37's provision standards exemption, and the IASB will incorporate a similar exemption in their first standard on general sustainability related disclosure S1, when the entity is required to disclose the information about its opportunities. And the second thing we decided to require the entity to disclose additional information only for a subset of material business combination. So not for all material business combination. So to do so, the IASB decided to provide both quantitative and qualitative thresholds to identify strategically important business combination for the entity to disclose additional information. And then a strategically important business combination would be one of those business combinations. The quantitative threshold the business combination that meets any one of three quantitative thresholds that exceed 10% of the acquired equivalent measures. Three measures are the acquires revenue, or acquires operating profit, or the asset recognized on acquisition. And then another thing is a qualitative threshold. Results, which is a business combination results in a company entering a new geographical area of operations or new major line of business. This requirement is consistent with what we already have in IFRS 5. Okay. Let me move on to the explaining about the management commentary project. So IASB developed the practical statement management commentary, originally published in 2010, to help the entities to prepare the management commentary. In some jurisdiction, probably we call it MD&A or management report. This is not a part of the IFRS accounting standards, so some of you might not be really interested in this project. However, this project is now spotlighted because it might be an excellent example of the connectivity between IASB and IASB, our sister board. On the exposure draft of the overhaul of our practical statement management commentary published in May 2021, we received positive feedback, and since the IASB was established in November 2021, the stakeholders have requested that the two boards should work together on this project. When IASB discussed, our sister board discussed the priority items to be consulted with the stakeholders in its coming agenda consultation. It will come very shortly. It decided to include this project. And the IASB's agenda consultation has not yet started, but it will come very soon. So please stay tuned. And given that integrated reporting framework is also under the roof of the IFRS Foundation now, the chair of both IASB and IASB announced the two boards would work together to consider the similarities and differences between IASB's management commentaries, ED's proposals, and the integrated reporting frameworks. So I think that's all essence of three main projects. So I will pause here for question.
Thank you. So a lot of big topics on your work program right now. I'm sure some of our board members will have some questions on it. Any questions for the board? Maybe a question regarding timing. So are you in sort of a holding pattern on management commentary until the IASB does its work on its agenda consultation, or is there a sense that you guys are going to work in background on this, you know, at the same time? This seems to be such a relevant topic right now, and I just wonder what the timing is for this. It also clearly has consequences for the assurability. You're on mute, Rika.
Well, thank you very much for a great question. I think that at this moment, of course, we put this project on hold a little bit, but at the same time, in the backstage, staff is working hard to prepare for the consideration of similarities and difference between IASB's management commentaries exposure draft proposal and then integrated reporting framework. And they also start thinking about how we can collaborate together with our sister board. At the same time, working focus on the requests from our stakeholders. So yes, we have not yet decided clear timetable for this project, but behind the scene, yes, staff is supporting us to promote this project in the future.
Eric?
Thanks, Tom, and Rico, thanks very much. I just wanted to go back to the business combinations disclosures project, and I may have missed it in the presentation. I think one of the topics we had been challenged with was the disclosures about synergies, and I was just wondering where that ended up in your final deliberations.
Yes, thank you for that question. We are still requiring, in the discussion paper, we propose the entity to disclose not only qualitative information, but also quantitative amount of synergies. And we tentatively decided to hold that proposal, but at the same time, we try to clarify what type of information we require entity to disclose the amount of synergies. So what we consider is we should provide clarity on the level of aggregation, how to disclose the amount of synergies. At present, we consider that that should be a kind of the level of by nature information, like the amount of cost synergy or amount of revenue synergy. But this requirement is subject to exemption that which I explained in my presentation. So if the entity has to use that exemption, in such a case, the entity might consider whether they can provide amount of synergy at the total amount without disaggregation.
Any other
Yes.
questions? Thank you, Rick. Okay, I think we're moving on to your post-implementation reviews.
Yes. Okay. Thank you, Tom. So I will hand over to Jennifer to discuss post-implementation reviews. Jennifer, please.
Yeah, thank you, Rika. So if we could go to the next slide, slide 20, please. So we thought it'd be useful to talk a little bit about the post-implementation reviews that we have ongoing. So as you can see here, we have 2 that are recently completed, 2 that are ongoing, and then 2 that are forthcoming. So maybe just to give you a little bit of a reminder, the IASB is required by our due process to conduct a post-implementation review of each new standard or a major amendment, but also can undertake PIRs in other circumstances as well. And the objective of a post-implementation review is to assess whether the effects of applying new requirements are as intended. So some key questions that are asked are there any fundamental questions about the objectives and principles of the requirements? Can the requirements be applied consistently? Do they provide useful information to investors? And have there been unexpected costs related to those applying those requirements? So for the recently completed PIRs, the first one was what we refer to as our suite of standards, IFRS 10, 11, and 12. And that covers consolidated financial statements, joint arrangements, and also disclosure of interests in other entities. So that was completed last year in 2022. And then also, as I already mentioned, we completed the PIR of financial instruments, classification and measurement, that segment of IFRS 9. And then for the 2 ongoing PIRs I mentioned earlier, we have requests for information that will be coming out in the first half of this year related to impairment, the PIR of impairment of financial instruments, and then also revenue under IFRS 15. And just to give you a sense of what the teams are doing currently on those projects, they're in the first phase of work, which involves conducting outreach and information gathering to identify the matters that would be examined in the PIR. And then after the request for information goes out, they would consider the feedback that comes in. And then finally, for the forthcoming PIRs, we do expect our leases standard, IFRS 16, to undergo a PIR. And then also what I call the last piece of the financial instrument standard, hedge accounting, is also expected to be forthcoming. And I think that one the board is planning to discuss in the second half of this year when to begin those efforts. So it's relatively quick on the post-implementation reviews. Maybe I'll just pause, see if there are any questions before I move on.
Any questions? I see none. Jennifer, please.
Okay, thank you. We could go on to the maintenance projects, slide 22. So I'll talk through a few of our maintenance projects. And first, this just gives you an overview of the team's progress in advancing the work on the various maintenance projects. So you can see on the left, we have 2 projects that are in the pre-exposure draft phase. One is on provisions, and the other one I've mentioned earlier is the amendments to classification and measurement of financial instruments. That one, the exposure draft, is expected to come out soon. We do have the international tax reform, Pillar 2 model rules, that is out for comment right now. And then on the right-hand side, we have 2 projects that are nearing completion, supplier finance arrangements, which I mentioned, and then also lack of exchangeability. The supplier finance arrangements we expect to complete in the second quarter of this year, and lack of exchangeability we expect in the third quarter of this year. So if we could go on to the next slide, slide 23, I'll talk a little bit about both the amendments to classification and measurement and then also the tax reform project. So firstly, with this project, as I said, it came out of the post-implementation review of classification and measurement. And even though overall the requirements are working as intended, the board did identify some areas of improvement where improvement could be needed. And so I won't go into all the details because this does get very complicated and technical very quickly. But I did want to mention just maybe a few elements. So one aspect or one topic that the board is tackling is contractual cash flow characteristics of financial assets. And this has a bearing on whether the cash flows are considered to be solely payments of principal and interest. If you've heard that expression, people refer to it as SPPI. That's an important assessment in determining whether a financial asset can be measured at amortized cost rather than fair value. So that's an aspect that the team has been looking at. And then another aspect of the project is to address derecognition of financial liabilities that are settled through electronic cash transfers. And this is a topic that came out of a matter that was discussed by the IFRS Interpretations Committee last year, and then was referred or was picked up by the board for clarification through standard setting. And the Interpretations Committee had discussed a request that asks whether an entity can derecognize a trade receivable and recognize cash when a cash transfer is initiated rather than when it is settled. And this led to quite a few comments and questions, and also led to some questions about what happens on the other side of the transaction for an entity with the liability on its books. In October of 2022, the IASB tentatively decided to develop an accounting policy choice to allow an entity to derecognize a financial liability before it delivers cash on the settlement date when certain specified criteria are met. So you'll see more details about that in the exposure draft, which is expected to be issued in March. So if we could go on to the next slide, please. I'll give you a little bit of information about the International Tax Reform Project, Pillar 2 Model Rules. And so this, as you may be aware, the Organization for Economic Cooperation and Development, which is the OECD, has published Pillar 2 Model Rules. The Pillar 2 Model Rules have a couple of aspects to them. One is it aims to ensure that large multinational companies pay a minimum amount of tax on income arising from each jurisdiction in which they operate. And then they would achieve this aim by applying a system of what they call top-up taxes that results in the total amount of taxes payable on excess profits in each jurisdiction, representing at least the minimum rate of 15%. So that's the OECD's proposal. So what is the impact on the IASB? The IASB has received requests from stakeholders to deal with the potential implications of these rules for the accounting for income taxes in the financial statements. And stakeholders in particular have expressed concerns about some of the difficulties and uncertainties of applying deferred tax accounting arising from the rules. And some stakeholders said there's a particularly urgent need for clarity because of the imminent implementation of these rules in certain jurisdictions. And for example, we've heard from companies with March 31st year ends that have a more urgent need for what to do with their deferred tax accounting. So the board has proposed some amendments to the income tax standard, which is IAS 12, and the proposed amendments would introduce a temporary exception to the accounting for deferred taxes arising from the implementation of the OECD's Pillar 2 model rules, and also would put into place targeted disclosure requirements for the affected companies. The temporary exception would apply until the IASB either removes the exception or makes it permanent. And you may have been following the FASB, the US standard setter, has also discussed these model rules. And I think for them, for US GAAP, they have alternative minimum taxes requirements that they can follow. So in terms of timing, the comments are due March 10th, 2023, and then the IASB aims to finalize the amendments in the second quarter of this year, subject to the comments that come in. So I will pause there. I think I did see a hand up. I'll pause there for any questions.
So Josephine, your hand was up for a moment.
It was, but but then Jennifer very kindly answered the question that she obviously read my mind. So thank you, Jennifer. I was really going to ask you about the timing. Clearly, that's a very, very quick turnaround for you all.
It is a quick turnaround. I think it really, as I say, comes about because of the urgent need in some jurisdictions.
Yeah.
Any other? Sue?
So it's probably a question for us rather than for Jennifer, actually, was I am aware there are quite a lot of assurance implications around this whole piece of the reporting. So I just, maybe I should know the answer, but I just wondered what we're doing in terms of feeding some of that into the IASB.
Philly or
Yeah, Tom, so the IASB liaison working group that have at the previous meeting considered the current open EDs. And I think we were also waiting for the presentation from Rika and Jennifer today to see whether there's a need for us to provide any specific feedback on this ED. As Jennifer has indicated, this is very targeted. It is really just about, this proposal is really just about the exemption that is being granted. But Sally Ann, I see your hand is up as well.
Yes, thank you. And if I'm correct, Jennifer, it really only came out in January, right? It was a very quick turnaround. So I think we're looking, Sue, for the presentation today, and then I'll regroup with Eric and we'll do next steps. I did see there's some disclosures relating to this. I took a quick look at it. So we will regroup as a working group as well, Sue.
Thank you very much for all your consideration. We truly appreciate any feedback we can have from you.
Agreed.
Right. Yeah, I see no other hands.
Okay, in that case, I will pass back to Rika to talk about the third agenda consultation.
Okay, let me talk about our agenda consultation, the third agenda consultation for us. Please move on to the slide 26. So in July 2022, last year, we published the feedback statement of the IASB's third agenda consultation. So that determined our activities and work plan from 2022 to 2026. Because we considered our stakeholders' feedback critical to determine our strategic priorities and work plan, we built our deliberations on feedback we received. Thank you very much for your comment letter to request for information on the third agenda consultation. All board members appreciate it. Please move on to the next slide. I will talk about the feedback and our decisions. So while we deliberated our agenda consultation based on the feedback to the request for information, we had to consider a couple of things when deliberating strategic focuses and priorities. First, as of today, we have 23 projects on our work plan. So even though we haven't yet added our new project from this agenda consultation. So, and also we received the feedback from our stakeholders to keep focusing on those existing projects in a work plan and complete those projects as quickly as possible. So therefore, we had to narrow the number of potential projects to be newly added to work plan from about 70 to 3. The consideration of the resource constraints is not only about ours, but also about our stakeholders' capacity to engage with us. The second thing is we have to be always responsive to fast-changing environments in global financial markets. So we need to leave some flexible resources for urgent, time-sensitive projects when necessary. So we are current, as Jennifer mentioned, we are currently working on the amendment to IS 12 regarding the OECD Pillar 2 tax model and the amendment to IFRS 9 on the ESG-linked financial instrument. Those projects were added to our work plan because of the urgent, pervasive needs in the global financial market, even though that were not requested in the previous agenda consultation. The third thing is, while IASB deliberated our agenda consultation, our sister board, the IASB, was established and started its activities. So our stakeholders' feedback on this environment was to consider the connectivity between the two boards as much as possible. So at the same time, the IASB, our sister board, is still establishing its standard setting body, while us, the IASB, is in a more mature status as a standard setter. So we face some uncertainties in future environments, but we have to consider connectivity a priority. At the same time, we have to be flexible and creative about our joint effort on some overlapped projects and activities of two boards, like management commentary. Regarding the strategic direction and balance of the IASB's activity, we decided to leave our current level of focus on the main activities largely unchanged, but we decided to include slightly our current level focus, slightly increase our current level of focus on digital financial reporting and the understandability and accessibility of the IFRS accounting standards. So as a result, we also decided to slightly decrease our current level of focus on new accounting and major amendments to accounting standards. That's kind of the consequence of our decisions. Let me talk about new project on next slide, 28. So we decided to include two new projects, intangible asset and statement of cash flows in the research pipeline, and climate-related risks in financial statements in the maintenance project pipeline. The IASB has not decided on the scope of those three projects. We also decided to create a reserve list and include two projects, operating segments and pollutant pricing mechanism. We will not start any activity for those two projects on the reserve list until we confirm an availability in our resource. So those projects will not be considered. I'm sorry. If we cannot begin these projects in this agenda consultation cycle, then we will put those two projects in the next agenda consultation. So let me a little bit talk about the going concern project. I know that we disappointed you about our decision on the going concern project, but let me explain some background and what we still can do with you. So during our deliberation of agenda consultation, we assessed the merits of adding the going concern project to our work plan. However, due to resource constraints and capacity used for other high priority projects like intangibles and others, the IASB concluded not to add the going concern project to our work plan. However, the IASB always considers the maintenance of great relationship with the IAASB members essential, and we also acknowledge the IASB's ongoing going concern project. So not as a project in our work plan, but as a part of the stakeholder engagement with IAASB, we just continue monitoring the status of your going concern project. At the same time, we have a timely dialogue with IAASB and its working group members on this project. So we really appreciate Josephine and Sally Ann's effort to keep us current on your going concern projects So thank you for doing this for us. And I hope we just continue this nice dialogue on this project and other projects.
Okay. Are you pausing here again?
Should I pause here?
Or do you want to continue? I didn't know if you were pausing here. Of course, we don't get disappointed as a board. I would just point out that the demand for consistency across the ecosystem of going concern is what drove our comments in this process, and that there are persistent and calls on the going concern side, both from a audit side, but also from a reported side, to provide clarity is what drives our comments. So as a board, we don't take positions about being disappointed or not, but we do think that having a robust total ecosystem response would enhance confidence on this key public interest matter. This is a point too that's been reinforced by the PIOB, and it receives some sympathy with our oversight body overall at the monitoring group level. I see Josephine's hands up.
Yeah, Tom, thank you. I echo that completely, of course, Rika. And, you know, it has been really helpful for us to engage with you and just talk you through some of our suggestions and our proposals and get your feedback on that. And that's really helped us noodle over things a little bit longer and hopefully come to the right solution there. So really appreciate that, and look forward to more interactions going forward as well. Thank you.
Thank you, Jennifer, and thank you, Tom. Yes, we also appreciate our continued effort in engaging between two boards on this project and other projects. So thank you very much.
Okay. And, you know, to the extent that there's clarity provided in other ways about the proper application of your standards is always helpful in terms of their auditability.
Yes, and then also we already published the education materials on our agenda decision on the going concern disclosures, and then other history of how we interacted with IAASB and other national standard setters. So I hope that education materials to help our stakeholders and your stakeholders to understand the principle of the FATSA standard required.
Okay, so I interrupted you as you were about to hit the research project pipeline. So, but this has been a big topic of conversation between our two boards, and of course amongst many who comment on both of our work plans.
That's true. I mean, I think I would like to say probably intangible asset project is we will do a comprehensive review of IS38 intangible asset, and then probably we also need to work together with IASB, our sister board members, on some topics relating to intangible asset. But at the same time, we also have a maintenance project pipeline that include climate-related requirements, especially about climate-related risk. Disclosure is some of the items that the stakeholders have a little bit concerned about the companies to provide insufficient information, and sometimes the application of our requirements in some standards are inconsistent. So in order to respond to those concerns, we will do some research to identify the cause of the stakeholders' concerns. At the same time, we will also consider the IASB, our sister board's disclosure standard, how that affects to our financial reporting ecosystem as a whole. So after considering those things, we will decide whether, if any, narrow scope amendment to the standards might be needed or not. So that will come shortly from us. So please stay tuned. I think if no one has any question, probably I will turn to Jennifer to discuss more about the connectivity between IASB and our sister board, IASB.
Okay, thank you, Rika. If we could go to slide 32, we can talk about connectivity. Thank you. So, and some of this we've talked about already, but just to summarize, we've had from various consultations that have been done, including whether to set up the IASB, and then also on the third agenda consultation, we've seen from constituents that there's a demand for connectivity between the two boards, the IASB and the IASB. And certainly part of that was when the IASB was created, there was strong support for housing it under the IFRS Foundation because of the opportunity for connectivity between the two boards. But I think also an important point, which is mentioned at the end, is constituents also recognize the importance of each board being able to prioritize its agenda and make progress on its standalone projects. And as we've already talked about, as Rika's talked about, the IASB completed its third agenda consultation, and the IASB is planning to do its own agenda consultation this year. So they'll have an opportunity to get feedback there. If you could go to the next slide, please. Just to sort of maybe ask the question, why is connectivity important between the two boards? And maybe starting at the bottom, because we think it leads to better general purpose financial reporting that provides better information for decision making. And we think this will come about through both connectivity in process and also connectivity in product. In terms of process considerations, we've already seen there's the opportunity and the execution of information sharing between the two boards, and also plans to do joint IASB, IASB meetings, which hasn't happened yet, but I think that's planned. And then connectivity and product, we have the opportunity for shared concepts such as materiality. And Rika's already talked about some of the complementary requirements that could be worked on, including intangible assets. And we've also talked about climate-related risks in the financial statements, which likely would be a joint effort, or would have at least input from both boards in coming up with requirements there. So maybe we could go to the next slide. This just depicts what I'll call kind of the building blocks or the components of general purpose financial reporting, which has an investor focus. And you can see the role of both the IASB in terms of setting standards for financial statements, and then also the IASB in setting the sustainability related financial disclosure requirements. And Rika's already mentioned the possibility for a discussion between the two boards on, or work between the two boards on management commentary and integrated reporting, which is the red box that overlaps. And I've done a prior presentation on this. I think some people got a little bit hung up on sort of the size of the boxes. Does the light blue mean that the IASB has a larger remit? So I wouldn't focus too much on that. It's really just showing the components and where the two boards come in and where they have a role in general purpose financial reporting. And maybe you could go on to the next slide. It brings in a few more elements, as you can see, as we know, there are other corporate reporting frameworks that have a multi-stakeholder focus that are outside of both the IASB and IASB's remit. We see jurisdictional initiatives that come into play that may overlap with what the boards do or could be outside of that. So that's something that the boards have in mind as they work through each of their respective agendas and look for opportunities to work together as well. So I think with that, I'll just pause there to see if there are any comments or questions. Otherwise, we can move on.
Any questions, comments? Josephine, one thing is I'm amazed that people really focus on, so I know that they do, size and colors of boxes, but
Yeah.
sort of like the London Underground map, it doesn't have to reflect the scale. Josephine?
Yeah, thank you. I'm just about to comment on the boxes as well. No, I totally understand that, and we face that sometimes with our own presentations. But I am interested in the piece there, the optics of management commentary and integrated reporting. And I guess in my mind, I had thought that as part of that project, there would be greater integration of sustainability related financial disclosures and financial statements disclosures. But so I recognize that we don't need to concentrate too much on that. But at this point, I guess, Jennifer, it's more of an observation and potentially a question there. Is at this stage, you probably don't know, do you, how much of that can be integrated going forward?
Yes, I think that's to be determined as they go through the project. I think some of the feedback I've heard, as well as I think there are different views maybe out in the world about what exactly an integrated report is. And I think there are also questions about, so how does that, and then how, if you already have questions about that, how does that then come into play with management commentary, where, as we know, some jurisdictions have their own version of MD&A or management reports, and then, some might use our practice aid. So I think there's still some, some questions to work through, but I think that's a good observation.
Kai?
Thanks, Tom, and thanks for the presentations. Were very interesting. My question also relates to the last slide, we have discussed now. I have a little bit problem to see the box with the management commentary included, or parts of this box included in the financial statements box. So my perspective is a more European perspective, especially a German perspective. And when I refer to our law, we have on the one hand side the financial statements, and we have on the other side the so-called management commentary. But it's not the management commentary is not a part or of the financial statement. It looks like here. That's my problem from this view. The other one, I very agree with your picture, to see that financial statements is more and more part of the sustainability related financial disclosures, and there are other kinds of reporting areas or tools from different stakeholder perspective. That's very, very good. But my problem is that it seems to be that the management committee is part of the financial statement. That's what I want to add. Thanks.
Yeah, I think that's an interesting observation, and maybe that's something we can adjust. I think it really is just referring to that the IASB, as we know, has a practice aid, so it's not part of the standards on and management commentary. But I take your point on that.
Okay, I'm conscious of time. We have about 10 minutes left, I believe, right? I do notice that you have one more section, so it may be perfect timing, but shall we turn to that?
Yes, please do so, Tom. Thank you very much. I will briefly talk about digital financial reporting. So please move on to slide 37. So as part of our third agenda consultation on its priorities from 2022 through 2026, we agreed to slightly increase its current level of focus on the digital financial report. We historically focus on the digital financial report on general maintenance and the update of the IFRS accounting taxonomy, but now we mention digital financial information or digital financial reporting. It means a little bit broader concept than just taking care of the IFRS accounting taxonomy. That means digital consumption of the general purpose financial report by users of those reports. So we have a little bit extensive meaning about digital financial report now. And This is because we observe the emerging needs and also the more extensive consumption of digital financial information in the global financial market. We decided to explore whether we can undertake activities to facilitate improved usefulness, quality, accessibility, and comparability of digital financial information. So, however, I think there are some challenges identified in the current situation, especially about there are fragmented global adoption of the IFRS accounting taxonomy and the quality of digital data, as well as challenges in accessing digital data in some jurisdictions. Let me move on to the next slide. And a little bit talk about the connectivity with IASB. We consider this area, the digital financial reporting strategy, can be one of the connectivity projects between the two boards, IASB and IASB. Although the IASB has not yet discussed its digital reporting strategy to the same extent as we did, but the stakeholder requested the IASB to develop its standards in a way as the entity can prepare both paper-based and digital information simultaneously. So in October last year, the IASB decided to advance the IFRS Sustainability Disclosure Taxonomy for digital reporting on its 2-year work plan. Additionally, the IASB will discuss its digital reporting strategy in the future meetings, similar to we did in 2022 and January. Let's move on to the next slide. I think the vision we have on this slide as a strategy is pretty much consistent with the IFRS Foundation's mission in the global financial market. And the most important thing about the digital financial reporting strategy is it goes beyond the IFRS accounting taxonomy. So we can facilitate the improvement in the digital financial reporting in global financial market. However, given the limits of the IASB's role as a standard setter, we need to work together with other important stakeholders like auditors, market regulators, developers of digital technologies, users, preparers, and others. So because investors have always demanded the quality of digital information and digital data, IAASB and audit firms supporting this strategy is, I think, essential. So we really excited to see that the IAASB's Agenda Consultation 2024 to 2027 has included a proposal for exploration, a new standard on digital format XBRL. I hope we can have more dialogue on this digital strategy with you in the future as well. So this is the end of the presentation we prepared. So I would like to pause here for a question.
Any questions? You know, this is to me, this is a topic that is percolating on our side as well, in that where there's real broad intersection between both the financial and non-financial side. And I think it's just a reminder to us that we may have to take this issue on more thoroughly sooner rather than later. Any other comments?
Tom, thank you very much for your strong support on this strategy and helping this digital ecosystem in the global financial market.
I don't know. I think this was your last topic, but I don't know if you have any concluding remarks.
Thank you very much for today's opportunity. It's really, we truly appreciate this opportunity to share our IASB's update with IAASB members. I hope you all found today's session useful, and we also want to continue maintaining this excellent relationship and dialogue between the two boards, IASB, and the IASB. Thank you,
Thank
Tom.
you. Thank you. It was an excellent presentation, Rika and Jennifer. Thank you for that. And we too value our interaction. As I said, our strategy that's out for public comment right now talks about the very importance of interacting and coordinating with fellow standard setters in the international environment. So we undoubtedly will be speaking quite a bit. And, even next week, I'm going to Montreal to the IASB symposium, and I'm sure IASB members will be there as well. And that just shows how much interaction there's likely to be going forward. I'm going to pause here and ask anyone if they have any final observations before I close the meeting, including our observers, if they want to add anything.
I just want to add one thing. Tom, thank you for mentioning. Thank you for mentioning about our sister board. I really appreciate your extensive relationship, including IASB under the same roof of IFRS Foundation. So I hope our sister board also have developed a great relationship with you going forward.
Yeah, and we've been closely interacting with Emmanuel and Sue, and in fact, we presented to the IASB at one of their early meetings board, and there's a lot of interaction happening at the staff level too. Michael Haythett, I saw your hand up raised.
Okay, thank you, Tom, and thank you to the IASB representatives. I found it a very interesting discussion. I'm sure it'll be quite helpful to further the communication between the two boards. And it's good to see that there are lots of very important projects keeping you busy. And many of those will flow through to have implications on the IAASB's strategy and work plan. So very essential to keep up the contact and to keep the discussions going also on going concern, which I recognize is not a project on your agenda, but still an important thing to deal with in a way that's going to be as useful as possible to stakeholders. So thank you.
Thank you, Michael. So I just want to thank everyone for joining this call. I believe we have a big quorum in Tokyo right now at a task force meeting. So thank you for staying up late with us. Thank you for our IASB friends for joining us. I'm sure everyone is desperate to see when the minutes will be posted, and they will be posted in due course for approval at our March meeting, and that will be combined with our December 2022 minutes. We have a CAG meeting scheduled for the 7th and 8th of March in person in New York. Details of that meeting have already been communicated to CAG representatives. And the next quarterly meeting for our board is March 20th to the 24th. The agenda is in the process of being finalized. It should be circulated shortly. And for those board members traveling, you should have the hotel options already. So please remember to register for that meeting by February 10th. So thank you, everyone. Have a good rest of the day. I know our Tokyo crew will be resting up because they probably have a lot of work tomorrow. So all the best, and I'll speak to you soon. Have a good one. Bye.
Bye, everyone.
Thank you, everyone.
everyone.
Thank you
Bye-bye.
very much.
Thank you. Bye.
The recording has stopped.